All right, what's up, guys? Steve here with the Breakout Project. Very short video tonight. Um, the basics. We're starting with the basics. Um, you need to know how I and how you should set up your charts. The night before, you're always going to want to be proactively looking forward to the coming day. Uh, the market, a lot of times, signals what's happened in the past will happen in the future. So that's why we do this. It's constant education, it's constant learning. The more that you do this, the better at trading you will get. Now, one thing I want to just point out here, whenever I do my, let's just call them examples, tutorials, I'm using really one instrument. Um, I want you guys to realize that you don't need to trade 10 to 15 stocks to be successful. If you're literally day trading and if you're trying to make money within that 8 hour period, 1 hour period, 23-hour period, whatever it may be, focus on a few instruments. Do not go above and beyond trying to master a bunch of instruments at one time, particularly in the beginning. Because honestly, two examples when I trade futures a lot and I also trade options, but I like futures because I could trade with other people's money. So, with futures, the two instruments that I trade are NQ and ES, which is basically the mini NASDAQ and SPX. If you're familiar with those, they're basically indexes, um, and they move. And there's several opportunities a day to get good moves. You don't need to go searching for all these stocks and searching for, you know, 10 EMA and 50 EMA crossovers and stuff like that. You could literally make a boatload of money just on these two futures. Okay. So I'm always using NQ. It's what I like to trade. I like the way it moves. So now let's get into the charts here. So basically what I'm doing when I'm charting is the first things first is I'm pulling up like the daily and the 4 hour chart. So we're looking at the 4 hour right now. Hence, you're going all the way back to Wednesday, July, or that's June 28th. So this is from June 28th all the way to current. And of course, this is serious price action. From the bottom of this, 14,800 to the top of this, 16,252. So serious price action. A lot of money to be made in this price action over the course of the past 2 months. And just like I said, there's a lot of money to be made intraday as well. When you're trading futures, you're going to be trading intraday. Okay. You're going to be wanting to get in and out. But the first things first, I go and look at a daily, I look at a 4 hour. So here's what the daily would look like. And of course, with the daily chart, you're going to see a lot more. You're going to see a lot more candles, a lot more bars. This goes all the way back to Wednesday, July 14th of 2021. This is how many days this is. Okay. But we're mainly interested in the daily for our main levels and like the 4 hour, 1 hour for our main support levels. So what I will do is I will basically take a trend line and I will note from right there to right there. Notice how basically I'm taking that line. Let me zoom in for you. I'm taking that line and I'm extending it from the wick. Okay, so you can see the candle wick right there. Candle wicks, candle wicks, candle wicks. As long as a candle wick or body of the candle does not go past this trend line is still valid. So it's clearly obvious that since July 18th, we have been in a downtrend. And then what I'll do as well is I'll take basically another trend line and I'll go like this. I'll find a spot down here I'll start this trend line right here, and then I'll connect them. So I know that we are from, even though from the 18th of July, we're in a downtrend, from the 8th of June, we're currently in an uptrend. So this is how you need to decipher the markets, right? What you're realizing is that price action for the past 2 months really has been in between this descending but yet ascending quote unquote wedge. It's ascending from here, but it's descending from here. Now, the great part about TradingView is that, when you go to your 4 hour, even though it might look a little bit different per se, those lines stay there, right? Okay, so then what I'm going to do, that's the bigger picture item, right? But I'm not worried about the bigger picture item right now. I'm just showing you how I would do this. So I'm going to remove those two drawings. What I'm going to focus on is I'm going to focus on the short-term picture, okay? Here is the short-term picture for me. Starting last Friday until today, there's been a pretty major sell-off. So what I'll do, said trend line, take that down like this. Go ahead and adjust this. All right, so we know that we're going pretty much down. Even though we've had some up days in that time period where trajectory is down. I'll then look left and I'll sit there and say, okay, what kind of similarities do we have? You'll see that there on the 23rd of August, there was a pretty major sell-off here. Well, what correlates with the 23rd of August? Go back and look, just type in 23 of August financial indicators. See what happened then and there. And then you'll look at around the 20th of September, roughly the same thing occurred. Now, what I'm also going to be doing is I'm also going to be drawing lines of what would be support and resistance, okay? So I'm going to make these a little bit different color just to diversify them. But now I'm going to look for areas where price basically over the course of time was coming up to, but yet bouncing off, quote unquote, rejecting. And you'll notice like right here, I'm going to draw a line. Let's just draw a line right here. Okay. Why did I draw a line right there? Well, let's zoom in here. And I can continue this line back. So let's continue that line back. So you'll see basically back here in the 23rd of August, you'll notice price came up, bounced off of it. Price came up, broke through temporarily, and came back below. Price basically came up, come up, broke through a little bit higher this time temporarily, came back down. Same thing occurred. This came up, broke through. Now we're above this. So this is going to act more as a support. And you'll notice price basically retraces down to it. Got a couple candle wicks below it. And then you'll notice that there's a couple bounce offs here and then back up and then back down really close to it. Same thing here, down. You notice this candle basically broke right through it. You had these candles coming back up, wicking off it, wicking off it, wicking off it, wicking off it, coming back down, wicked off it, also wicked off a descending trend line. And then that's the reason why price broke a lot lower today. So let me just give you an example. If this same exact scenario, as I said, this is the 4 hour chart. So this was last night. Let's see here, Wednesday, 6 a.m. So this was actually this morning. So when price came up here, if the bulls were able to take over and push price above this trend line and above this area, what is becoming resistance right now, Of course, price most likely would have went up here. But because what occurred was price basically wicked off it. It also wicked off a trend line. And then boom, in correspondence with FOMC day today, that's what occurred. There's also other areas of support and resistance that you could really draw. So let's just make this area red, because what's going on right now is prices coming up, selling off, prices coming up, selling off, prices coming up, selling off. And then let's look back again. Let's see another one that we could draw. And it said these don't necessarily have to be 100% perfect, but you want to try to get them as close as possible. Um, we're going to draw another one basically right here. Why did I draw that there? Because at one point in time, it was resistance, then turned into support. And notice here, it turned into support. You'll notice here, it turned into support, resistance up here, support down here. Then basically broke through. Price action was consolidating around this line, wicked off, wicked off, wicked off, wicked off, and then bam, broke through. So this was a level of, I'm going to call it short-term resistance. We're going to basically label that green. Why do I label it green? Because I know that chances are when price hits this line or comes close to this line, we're going to have a retracement back to this area of red. So now you look at this between here and here, that doesn't look like a big move, but in reality, it's let's just say this right here, 359 to 457, so almost a 100-point move. So you're getting a 100-point move over the course of, like, that would have been, let's see, 4, 8, that would have been like 3 days. Okay, 100-point move. Sometimes you'll get a 100-point move plus in a day, like you did today. But basically, price was consolidating in this range for the past couple days. What happened is once this broke through, it broke through this area of which was support. Now this turns resistance. This is the new support, and then it was basically bouncing off of this, bouncing off of this. You can draw these lines multiple places, but a good rule of thumb is that you always want to have about 3 to 4 touches off of that line. Okay. So I will draw that. And then what I'll do is I'll go to the 15-minute, and then I will see what the 15-minute looks like. Now you're going to notice that the 15-minute looks a little bit different because there's more candles, but you'll see here, maybe I could have taken this down a little bit, or, split the difference in between there. But the general rule of thumb is that was a good area. The general rule of thumb here is maybe, these wicks are going above it. I could have moved it up a little bit, moved it around. But now the good thing with TradingView is that you necessarily don't have to do this on your own, even though you should. And then what you should do is you should compare it. So I'm going to show you something right now. Actually, no, I don't want to do that yet. Okay. So now we're on the 15-minute chart. So we have this long-term trend line, as we had talked about, which is down. And now we're basically going to go to short term. So we're going to sit there and say, all right, where is price action potentially going to be both tomorrow and Friday? Well, the first thing I'm going to do is I'm on this 15-minute chart is I'm going to draw a line basically like right here. And why am I going to do that? Well, because see how price basically bounced off that a couple times? And this is an area of focus for me. This is, what I want to look for in the coming days. And then I'm going to also, I said I would normally do this on the, let's go back to the 4-hour chart so you can see a little bit better. I want to see where price is at right now. All right. That's what I want to do. So price is basically right here, right now. And I want to look left and see what areas of interest I have. Let's go to the daily just for shits and giggles. Okay, you'll notice when you go out to the daily, it looks a little bit cleaner. So price is right here right now, and you'll notice that we have this area right here is of interest. So what I'm going to do is I'm going to draw from basically this wick over to here and like that. Let's make that a little straighter. Boom, boom, boom. Okay. So what you can tell is that price still has a little bit further to potentially go if it wants to go down to this line. Now it's going to test this line, okay? And what's going to happen is if it breaks this line, the next area of interest that it's likely going to go to is probably right around here. Why is it going to go there? Well, you're going to notice there is consolidation around here, and it was a prior area of resistance. So you can know that price, if it breaks this line, it's eventually probably going to test here. Now, where it might also stop on a shorter term is it might stop on a shorter term right here. Why? Because we had two major candles right there. Okay, so here's the way that you could look at this. If price wicks off of this and you're starting to what's known as form a base and you're seeing some bullish consolidation where it wants to move price up, your next test up is likely going to be here. Okay, if it breaks through that, your next test up is likely going to be right here. So when I say that we trade lines and levels, I truly mean that. Like, this is not rocket science. You just have to visualize and predict what is going to happen. And how you do that is by you take, here's consideration. Let's go to a 15-minute chart so that you can see what's going on here. All right, here's the 15-minute chart from today. This is, 9:30. Here's open. What do you notice about today? Like, this is like the mean moving average of volume. You'll notice that we had very high volume up until about 12 o'clock. Volume as normal around noon, lunchtime, basically falls until about 2 o'clock. And then particularly today, because of FOMC, very high amounts of volume. Like, let's look back. Like, this was yesterday. Okay, you notice high amounts of volume up until about 11. Volume basically died off, but not nearly as much as today. And then look at like 2 o'clock, not nearly as much volume yesterday. So you weren't going to get nearly the crazy price moves that today was going to involve. But the big thing that you can take from today is if you're just strictly looking at the volume, is there's a lot more red than there is green. Now, that tells me that there's a lot more selling than there is buying. Every single one of these times that this candle opens lower than the previous, you're going to have red down here. Whenever the candle basically, like for example, right here, candle opened and closed higher, opened and closed higher. That's where you had those little two green blips right there. I mean, this is not very hard, but it can be very hard if you put too much thought into it. So now this chart looks pretty confusing. Let me back this out here. So here's where price is at right now. As I said, as noted, it's going to probably test as 1571, give or take, 5 points either side of that line. If we base there and get some bullish sentiment, then chances are most likely we're going to go up to, at least the middle of this because of the 4 hour chart. You'll see on the 4 hour chart, price is probably going to want to test this level right here, right? Because you'll notice that we have a couple wicks bouncing off of it. You see that there. And even going further back, we have a couple bodies of the candle basically closing below it, wicks going above it. So this is an area of interest. And then this area right here, what is that? Would be an area of interest. And as I said, that would be because of, take this back right here. I like that a little bit better. Those are two big body candles right there. Now, support and resistance are pretty much exact lines, but within this, we have what's known as like supply and demand. Okay, they're more of an area. I'm going to save that video for another day, but basically, what I will do is I will go like this, and then I will take a completely blank chart like I have. Oh, that's not what I wanted to do. Bear with me a second. So many freaking screens, so many mouses. All right, let me bring this over here. Let me make this a little bit bigger. Why did I just do that? Make this a little bit bigger so you can see. And I'm gonna go to the 15-minute chart right now. I'm gonna show you this. It's a lot cleaner looking. Those blue dashed lines are just each day. Okay, so Friday, Monday, Tuesday, Wednesday. I'm gonna go up here to indicators. Now this is a free indicator. And I'm gonna type in support. Sorry, this mic's right in front of my face. So, and you'll notice that there's a ton of them, but I like using LuxAlgo. Now this is a free indicator. I do subscribe to LuxAlgo for their premium indicators, but this is free. And once you put this indicator on, what's going to happen is it's basically going to show you the most recent support and resistance levels. And what you can actually do is you can go up here, and I believe no, unfortunately with this indicator you can't. Okay, but with some other indicators, you can choose the most recent, how many touches, yada, yada, yada. So this right here now doesn't have anything down here, but now tomorrow it will. But what you're seeing is that this was an area of interest, which I've already drawn that out on my prior chart. This was an area of interest, which I've already drawn that out on my prior chart. And these kind of correlate with each other. Let's just bring this down. It's going to be tough to see. No. That's not going to work. All right, let me just put this back here. Okay, so this is the simplest form of trading lines and levels. One other thing that I'm going to do, since this was such a sharp sell-off, what I'm going to be looking for, and I'll show you an example looking left. I'm going to take a line like this, and I'm going to draw it down to like right here, because this is basically where, well, actually, I'm going to draw it to like right there. That right there is an area where you'll notice that there was a base here. See, we came down, came back up a little bit, came back down. Now, what I'm going to do tomorrow when I wake up is I'm going to see how price has reacted over the course of the next 9 hours and see whether it has broken through this trend line and it's heading up, or it has basically respected this trend line and is going down. Okay, so that is what I'm going to do. Now let me show you another example over here. So here could be another trend line. There was a trend line right there. And what happened basically once price broke through this trend line? So it's coming down, coming down. It, formed this area of support. Pardon me. And then came up, came up, came up. Basically came close to this trend line. Let me zoom in here so you can see. Pull this up. I actually probably could have drawn that a little bit better. There we go. I like that. I'm basically taking it from, I don't even want to move it back there. I'm going to take it from right here. Okay. I'm going to take it from that prior area down to now. What you'll notice is that this area probably wouldn't be here. Let's actually do a replay real quick so I can show you. Let's see what happened here. All right, so say we got to right there. Now keep in mind I have this trend line drawn. I want to go forward. Son of a bee. What did I just do? Oh, I know what I just did. Okay. So we got that trend line drawn. Okay, so that's where that trend line basically formed. You notice price was respecting the trend line, bounced off of it almost twice, and then pretty drastic sell off. Came back down again, came back down again, came back down again. Now you'll notice that there's been basically 3 candles right here. Okay, you see those 3 candles? Now pay attention to that. Price is testing trend line, but it's not quite breaking it. Price wicks just over trend line. Price basically breaks trend line. These 3 candles right here are going to represent an area of support. Why? Because price came down to this level, hit once, hit 2, hit 3 times, and then based above it. And then from there, had a push up, push back down, and then broke through this trend line. Okay, so we know that that area is going to be an area of support where price is going to want to retest in time. But the smart thing to do would have been, now this is, I said this is on a 15-minute. All right. So once this goes and breaks through that trend line, what is likely going to happen means that the trend has reversed and price is going to go up. So as you have this trend line drawn here, you're watching price action, watching price action, watching price action, and then boom, this candle goes up, closes, and that's a pretty steep close above the trend line. So that's a very bullish candle. So what we'll do is we'll go forward. You'll notice that's a pretty bullish candle. That right there is a sign of a bearish candle. Bullish candle. And this is why this can be confusing, because a lot of people in this, now if this closed red, like if this candle right here closed red instead of green, what likely would have occurred? Price would have went back down and tested this trend line. But because this doji candle is what it's called, basically closed green, that means that it opened, I should say, it opened and closed green. So it opened and closed higher than what it opened. That's why it's green. You'll also notice down here, look at what volume is doing. Now 15-minute volume, lower volume, much higher or higher volume than the prior candle, lower volume than the prior candle, lower volume than the prior candle. So now what is likely going to occur since volume is decreasing is we're going to probably likely get a sell-off. And we did not. So basically that proved me wrong. But now keep in mind here, just because this line has broken doesn't mean you shouldn't extend it. So you can, I believe up here, you could thought there was an area where you could extend these lines. I'll have to look more. But let's break. Let's see this. No, that's not it. Sometimes what I do is I'll just continue this line by basically just going like, this, this, color blue, whatever color you want. But let's see what happens here. Price is basically playing games with us here. It's consolidating right along that line. So the moral of this story is trend lines. Price basically broke through it. If you would have, say, bought right here, 15,302, you could have rode this all the way out. I wouldn't have tested that because as soon as it came into this line, as soon as it got closer and basically broke through these candles right here, once it started getting up above these candles, I would have started looking to sell. But that's a 58-point move. So you see the potential here. Now let's get out of this, and I'm just going to show you because I'm going to do a video on this tomorrow. One other thing I want to show you what I'm going to do is I'm going to make another, let's call it line here. I'm going to go from here to here to here. So if price breaks through here, now I'm not going to trust it in the overnight hours. So what I will trust is that if price breaks through here and then I notice it gets above this level right here, then it's most likely that we're going to start reversing and going bullish, probably at least up until this blue line back here. If you just extend this line, that would be your first area of resistance, and then this would be your second area of resistance. So, for example, if you were buying a contract right now with the presumption that price was going to break this line, and actually, as I'm doing this video, it looks like a candle closed right. So see that red candle right there? Now we're going to keep an eye on that, but it's 15 minutes. This isn't going to go on for another 15 minutes. But what I'm saying is if price breaks this line, and you're not going to have a big candle like you did over here because the volume, this was at 12:45 in the afternoon. The volume just isn't going to be there in the overnight hours. Okay. You're basically trading with overseas markets right now, but you still could trade and you could still be making money or losing money right now, all depending on how you're trading. But basically, if we continue to watch this and then say tomorrow when I wake up, I noticed that it did break through this line, okay, and then continued, on an uptrend whatsoever. Once it gets to this point right here, I'm going to start taking it serious because if we look left at this point right here, it is a short-term area of which would be resistance because price was basically coming down. At one point it was support. Right here was support. This candle support, then it finally broke through, and then it acted as resistance. And it's been acting as resistance because the price is below. So whenever price is above, it would be support. Whenever price is below, it would be resistance. If price breaks through here and then gets up to this level right here and starts showing signs of bullish candles, what I mean by a bullish candle, extremely bullish candle right here. This is a bullish candle per se. It has a big body on it, but it also has a pretty big wick on the top. Bullish candles are going to either have full bodies like this, or you're also going to notice wicks down at the bottom, like right here. That is a bullish candle. Even though this is red right here, this is a bullish candle because it basically means that sellers brought price down here, but buyers stepped right back and bought it up. And indeed, it was a sign of a bullish candle, but a lot of people might have gotten faked out by that simply because, oh, well, we had an uptrend, and then all of a sudden we have this big, I guess you can call it a hammer candle, and then boom, back down here. Oh no, we're going to go back down. But in reality, what occurred was whoop, right up. Institutional money is in charge of all this, guys. They make money off the retail traders who don't know what they're doing, which is me sometimes, and it may be you sometimes, and it sometimes is even the professional traders who do this for a living and solely rely on its income. Um, but the bottom line is that now going into tomorrow, we're going to look here. If we're up here, then chances are we're gonna be bullish up to probably at least this point. If we break through and start testing this point, then chances are we can go up to this point. Yeah. And if we're bearish, here's what I'm going to look for bearish. I'm basically going to continue this trend line down. What would be bearish to me is that, even if we break above this, but don't get above this level here and then come back down, I'll just basically continue this trend line. And then if we break back below this trend line, then what I can probably know I'm going to look for is I'm going to basically go out to the 4-hour and 1-hour charts, and I'm going to start looking for areas of support down here where price would go to. But the most likely place that it will go to, and I'm not a good drawer, and I said that this wasn't going to be long, but I guess I've lied because we're now 40 minutes. There's just so much for me to go over. Where is my zigzag, 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 zigzag? You think I'd be more prepared with this, right? Whatever. I'm not going to mess with it and waste your time. I'll be more prepared next time. But the most likely place where price, let's just extend this line. Let's basically keep this at that wick right there. Let's just say price breaks through. Let's extend this line. Keep that right there. Let's say price breaks through, comes up to here, tests here, comes back down. The most likely place that it's going to retest is this line. Okay, if it breaks this line, most likely place is going to be this line, unless there is a major area of support in here. And how you would do that is you would basically go out to like the 4-hour, and then you would scroll it down, and you'll notice that my triangles or my lines here are all screwed up now. But this would be your next area of major support. You take this line right here and draw it over, and it should be pretty accurate. Now, let me just show you one other thing. You don't necessarily have to use the LuxAlgo. There's a ton of other indicators out there, and they're all going to be a little bit different. But let me just go to one that I've used in the past. I believe it was Pattern Alpha. This is one that I pay for. Okay. Um, you'll notice that now. Let me just bring in LuxAlgo. So this is why I say drawing your own lines is important, but also using these as well. And let's just go here to change. I know I could change the settings on these inputs. All levels, only major levels. Let's see how that changes things. Okay. So, most recent, It's not going to show any because I'm on the 4-hour. But if you go to the 15-minute chart, you should have some pop up. Are we going to? No. Going to have any pop up on the 5-minute? Okay, we have one pop up on the 5-minute. That's why I said using multiple indicators is very important, because like, look, this is your only area that this indicator has shown. But now if you go to here and you go to standard, it's going to show a lot more. Now if you go out here, but basically it's going to show areas of which are going to be resistance, because once again price is below that. Now if you go here, now that you'll notice on the 5-minute chart, what the LuxAlgo indicator actually did is it auto populated this for you. And that's why I was saying that if price breaks this trend line and gets up to here and then starts basing above here, I'm going to be looking for long positions, and then I'm going to be looking for long positions up to here. So that's why I say these indicators are very important for you, but you need TradingView, and you don't need the paid subscription for LuxAlgo. But what you're going to miss out on is stuff like this. And as you develop in your trading mind frame, in your education, you're going to miss out on stuff like this. Now, this probably looks like a big confusion mess to you, but it's really helpful. I try not to overcomplicate things, but like, here's for example, say you were trading tonight, right? Say you're trading NQ tonight, and we're on the 3-minute chart. And even though you weren't going to get a huge move, but say it's your only time to trade, well, what you can see here is on the 3-minute chart, this area of red means that you have bearish tendencies. So price is going down. You'll notice a lot of red candles, right? You'll also notice some purple candles in there. Purple candles are indecision candles. They value the volume, a lot of other things I don't want to get into right now. But what you can notice is like, okay, maybe I'm in a downtrend, and then all of a sudden, say you don't sell here because you think it's going to go down further, and then it starts coming up here, and then you see this purple candle. Say you got in up here, you're like, okay, I need to exit. That's like a sign that possibly you may want to exit. But here's a perfect example right here. All right, say you notice through other means, through maybe an RSI, relative strength index, or an oscillator that you may use, but you see this, right? Don't pay any attention to these right here, even though you could. They auto-populate. I can't find how to get them off my chart, but they actually are pretty valuable, because you're going to notice here, take profit 1, take profit 2. Basically, what's going on is that this was a buy signal that was auto-programmed by this indicator. And if you followed this right now, you would have made money off of it. But I simply wanted to have just followed this. There would have been a lot of other things. What I would have paid attention to, as I said, this is a 3-minute chart, so I'm scalping right now, right? I would have paid attention to, okay, we have this candle right here, big wick on the bottom. That means that buyers have stepped in, and it looks like we may have finally based. What I mean by that is that this downtrend may have finally began to reverse. Short term, maybe. It doesn't have to be long term, short term. What then happens is that we get a nice green candle, and then it closes above this red line. And then we get another green candle, and it closes above this red line. And then on this candle right here, this is the candle that I would have probably entered, the same candle that, this buy signal populated. But what I would have been paying attention to is that this wick basically touched off of this line, and then even though it opened right here, right? It opened right here. Sellers tried to push it down. Buyers stepped back in just like they did down here. Notice that wick. Buyer stepped in and pushed this up here. And then this line turned from red to green. Now, if I take you to the 5-minute chart, it's probably not going to look like that. You'll notice right here that it turned green a lot further afterwards. And then if I take you to the 15-minute chart, it's still going to be red. Actually, oh no, we do have some green there. Okay. But we have green with what are, indecision candles. So these aren't strong buy candles. These are basically indecision candles, but nonetheless, you go back here to this 3 minute and say you basically got in right where I would have got in, right at this wick. I would have basically set my limit order, right around, probably right at the base of this candle, at the wick of that candle. I would have set a limit buy order at 15,088, and you let it ride. As long as we're above here, what I would have done then is, as we got towards this trend line, which was auto populated for you with the LuxAlgo Premium, I would have paid attention to how we were going to react. And say I would have had 5 contracts, I probably would have sold, say, like 3 as we got closer to this trend line, and I would have held 2. And the reason why I would have held 2 was because of this. I would have basically seen this, I would have seen this, I would have seen this, and then I would have exited the trade probably right about here. So I would have got a couple more points out of those two contracts. But nonetheless, as I said, you're 1588 up to 1599. That's 10 points. If you got 5 contracts on a 10-point move, that's some good money for the overnight hours with lower volume. So I said that's the glory about trading futures here. You could trade 23 hours a day, 5 days a week. It's not just simply a 9:30 to 4 type of thing. So say you work, first shift, say you're just bored at night, you have nothing to do. You're looking for some spare time to kill. Learn to trade, learn to do this. You're trading with other people's money. You don't have to trade with other people's money, but why wouldn't you? Now, it's not just as simple as trading with other people's money. You literally have to become decent at trading. You have to pass an evaluation. You have to prove to them that you're going to be responsible. You're not just going to try to gamble, buy 30 contracts down here and hope for a windfall trade. That does happen from time to time, but these people are going to catch on to that because they have back end systems which are reviewing your trades all the time. They're watching what you're doing. But as long as you can prove to them that you can trade and you can make money, well, you're going to make money. It's that simple. But this is a perfect example of a 3 minute chart, even in a downtrend. It's clearly down. It's been clearly down, clearly down. Here's another one where you could have made money on a reversal. All right, right here we had a pretty big sign that buyers were stepping in. We then had a purple candle, which made an indecision candle. We then noticed that the line turned from red to green. Now I want to just show you something quick. All right, because I need you to keep this in mind. Hindsight 2020, this all looks very easy. But really what you're seeing on this chart right now, this is what you're seeing at this time frame. You're seeing that this trend line has been populated for you, okay? You're seeing that you're in a progressively bearish state. But as you move forward here, let's move forward. You're noticing, okay, you're getting a little change in the color of the candle. You're also noticing higher volume. That's a good sign, right? Oh no, we have the same amount of red volume. Like this is what you're seeing. It's not like, oh, okay, I should have entered that trade. You can go back and look on the charts 1,000 times. You could have seen trades that you should have entered, but in reality, that's not what you're seeing. Okay, in real time, here is what you're seeing. This is you trading on a 3 minute chart. You're looking, you're analyzing, you're visualizing. You're looking down here. Down here is your buyer, your bears versus bulls volume. It basically shows you the same exact thing as here, but it shows you how much of a buying volume, because even in red candles up here, they're still buyers. So it's showing you that, in this green candle, there was still sellers. In this red candle, there was still buyers. Okay, so it gives you a visualization of how much buying and selling is really going on in each candle. This is volume plus plus, volume plus plus. This is another free indicator on TradingView. So I say you need TradingView, okay? And I have a link for you that will save you $15. It's not much, but it's going to save you. But TradingView, I said, is cheap. For the value that you're going to get on this platform, um, the basic package. Where are we at here? TradingView. 155 a year, 299 a year, or 600 a year. Okay. If you're serious about this, then you need this. I'm going to suggest that you go with the premium because you're going to get all the features, but you don't have to. You can go with something as the essential. It all depends on your budget. I understand that everyone's budget is different. Okay. You can always start with the essential and then upgrade to the premium. But let's get back to this trade. Said, here's what you're looking at in real time. You don't know what's going to happen next. Here's all you know is you have a green trend line right here. You have a red trend line right here. Now you'll notice that you really don't have any areas of support or resistance drawn, but you could throw those in there. You can basically go up here and you can sit there and say LuxAlgo support and resistance. Okay, on your 3 minute, it's going to give you your most recent. So this would be your most recent area of support, and then of course it broke it, so now it's turned into resistance. So let's see what happens here. Well, we already know what happens, but let's just watch this play out. Okay, and notice, see what happened there? There was a lot of buyers. Buyers went down, brought the price down, but sellers stepped in. See this selling, see this buying and selling volume? That's why you see, let me zoom in here. That's why you see that wick like that. Okay. Next candle. So what do we have here? All right, we have two candles in a row with decent buying volume. You'll notice that this is the mean average, like the moving average of volume. You'll notice that we were well above here and we were right at average here. But the reason why this is important is because right here you saw this candle. This candle indicated that maybe because it changed color and it was purple or slate or cobalt, whatever color that is, that maybe things are starting to reverse, just maybe. And probably what occurred with these two candles was a big fake out. Maybe some people decide to go long here, you know, retail traders that aren't that educated sit there and say, okay, well, we have a change, we have a reversal setting up. And they were right, but they weren't right here. So probably what they may have done is they, may have went long, gotten this candle, maybe set their stop loss, say like right here. And then boom, what happened? A little bit of liquidity grab on a 3 minute chart, price wick down, stopped you out, and you're out of the trade. But let's move forward. Okay, now you're noticing, see this, all this green right here? Now, even though this is a good visualization, you had roughly the same amount of volume in these two candles, but you had more sellers than the prior candle, more selling volume than the prior candle. But what's important is this. We're above this red line, okay, but it's still red. Now, here's where you would have got your buy signal. Now, whether you wanted to act on that buy signal or not, it's completely up to you. But you'll notice higher volume, much higher volume than the prior two candles. And you'll notice that much higher buying volume. And you also had probably the same amount of selling volume as these two candles because, of course, you had higher volume. But you would have got that signal. And then basically what would have occurred is that I would have saw this and I would have put a limit buy order, probably just a little bit below this wick. Okay. This next candle would have opened. Candle would have wicked down to this line. My order would have got filled. I would have put my stop loss order right below that candle right there. So I would have been willing to risk 4 points, right? 4 points for, and what would have ended up being about a 8 to 10 point move. So 2 to 1. And I would have got in this trade. Not because of this, even though some people do rely solely on these indicators and some of them do work. Okay. I'm not going to sit there and say that they don't, but I don't want to be reliant on an algorithm. I want to be reliant on my heart and my mind. But You go there. Now, what's happening? Okay, you notice that the line is turned. It's a solid green now. Now, keep in mind we're in a 3-minute time frame, so this isn't a possible. Okay, we're going to get a 50-point run out of this because why? What do we have up here? We have a green trend line. Okay, so we're going to know that this area is most likely going to act as an area of resistance for this trade. So it's not going to be a big trade. It's going to be a short-lived trade. And what you have to do is you have to watch what's going on as you get close to this line. Now, what you'll notice down here is that this volume has increased from that volume, and you also have more buying volume, and I guess a little bit more selling volume as well. But that comes with the territory of having more volume. And then what happens with the next candle? That happens. You get your first green can or your first red can or your first your first red volume, which means that this closed lower than what it opened. But don't always be faked out. I said your stop loss is down here. Now say you would have gotten 5 contracts. As you got close to this, like I told you, what I would have done is I would have probably sold probably about 3 of those contracts probably on this candle, just because I knew that we were getting close to this line. I mean, we're less than a point away. What is that? 95, 96. Yeah. So what? I would have, you wouldn't have couple dollars, right? I would have sold 3 there, but I would have held 2. And then what I would have done is I would have moved my stop loss from where it was originally up to this line. I'm moving it directly to this line. Okay. Stop loss is getting moved. See why I would have held? That's what I said, we basically went above that line. So we got faked out right here because we have two red volume candles or volume blocks in a row. The sell off is going to start. No, 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 no. Why? Because number one, we wanted to at least test this line of what was going to be resistance. And we did test it. We wicked off it, and then finally broke through it. And then what has occurred since then? I don't know because there we are. So basically, we broke through it, came back down, tested this line. Now this line is going to act as an area of what's going to be probably support now. Now the next major area where this is going to go to, you'll notice that it's above this area. The next major area it's probably going to get into, if it's going to continue up, is going to be going to have some probably resistance right in this area right here. And you'll notice that this candle wicked up and then came back down, but didn't quite get as high as I thought it would have gotten. But that doesn't mean that it still can't get there. So that's that, guys. I said this is lines and levels trading. This is how I would have set up my charts for the next day. I'm sorry that these videos are so long. I promise I'm trying to make them a lot shorter. But I'm really starting from the basics with you guys, and I'm really trying to teach you and give you a good education so that you don't have to go through the things that I went through in the beginning. I want everyone to be profitable, but of course, I need you to be realistic too. That comes with time, but this is a life skill. You're going to learn it, and once you learn it, you're never going to be able to unlearn it. You're going to take it with you, and you're going to be able to do it from anywhere you want in the country at any given time, 23 hours a day, 5 days a week, as long as you have internet access and a computer. Or if you want to do it from your phone, you could. I don't recommend trading from your phone. It's just harder to do. There's so many moving parts. When you're doing it like this at night, you can probably do it because the market moves a lot slower. But you got to be really good. You got to know what you're doing. You got to know how to use the programs. You got to know how to use the apps. You got to know how to set stop losses. You got to know how to take profit orders. Trading with your phone is difficult. I'm not going to sit there and lie to you. It is. It could be done, but it's difficult. But this is the glory of trading futures. As I said, it's 11:41 at night. You can't do this with the normal market. You can't do this with Tesla stock. You can't do this with Amazon stock unless you're trading futures on another platform. This platform that I use, Apex, doesn't allow it, but you could trade those instruments on another platform as well. Now, that concludes this tutorial. I hope you found it informative. If you're still here through the hour and 1 minute, then I'm going to ask you to if I could speak, please press the like button, subscribe so you can get notifications. It also helps with an algorithm. And this is Steve with The Breakout Project, guys. I'm out. We all have the same 24. Use wisely. Peace out.